Welcome to the Daily Insights That Matter. Now, since the beginning of the calendar year 2022, there has been a surge in the oil prices owing to the Russia-Ukraine crisis. Domestic energy producers were making windfall profits by selling crude oil to domestic refineries at high international prices. Now, in July, the centre had imposed a windfall tax on domestic crude oil producers in an effort to stop this. But later, they reduced the windfall tax due to easing oil prices. Now, even though crude oil prices have come down, the government yet again made a fresh decision to raise the windfall taxes. Let's understand why. Now, a windfall tax is a tax imposed on a company's profits that have experienced an unexpected and dramatic increase in its overall income. Now, India raised the windfall tax on domestically produced crude oil to 10,200 rupees per ton in the latest round of increase from 9,500 rupees per ton. It also slashed the special additional excise duty on the export of diesel to 10.5 rupees per litre from 13 rupees per litre. The duty on aviation turbine fuel exports remained unchanged at rupees 5 a litre. Now, the fresh decisions come around a month after the OPEC, or the Organization of Petroleum Exporting Countries, announced a reduction of the crude oil supply in the global markets. Now, crude oil prices have been volatile in the recent months. Despite being on a downward trend, they are still high. The Brent crude is still being traded in the international market at a range of $90 to $92 per barrel after touching an all-time high of $140 per barrel in the month of March. Now, if the stability in oil prices continues, this will help in further reducing the windfall taxes. Now, International Semiconductor Consortium, ISMC, would be investing $3 billion in a semiconductor chip-making plant in Karnataka. ISMC is a joint venture between Abu Dhabi-based Next Orbit Ventures and Israel's Tower Semiconductors. ISMC is one of the three consortia shortlisted by the centre to be eligible for the incentives. The JV would invest in a 65nm analog semiconductor fabrication plant in the city of Mysore. The unit will be one of the first and the largest semiconductor fabrication units in the country under the Indian Semiconductor Mission project. Now, the project is expected to generate about 1,500 direct jobs, and the government is looking to create about 10,000 indirect job opportunities and kick off an ancillary semiconductor ecosystem within the country. Now, the Indian government is offering huge incentives to semiconductor chip makers, including financing half of the project cost to build a fabrication ecosystem within the country and also to cut reliance on China. Now, two other players, the Vedanta Foxconn joint venture and Singapore-based IGSS, have also bid for incentives to set up semiconductor and display manufacturing units within the country. So what does all of this news mean for you? The tax on domestic crude oil output would mainly affect the margins of domestic oil producers. However, the reduction on levy on export of fuels will benefit the private refiners. The announcement will therefore have an indirect neutral impact on you for time being. Now, the setup of the first of its kind semiconductor fabrication plant will attract about 1,500 direct and about 10,000 indirect jobs while kicking off the semiconductor ancillary ecosystem within the country. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.